Now, Tom O'Brien.
Good afternoon, everyone. Ken Shreve with you, filling in for my good friend Tom O'Brien. I think Tom is either en route or already in Boston with his partner Steve Rhodes. Be sure to check them out tomorrow morning from 9 to 12 at the Boston Burlington Marriott. They're doing a 3-hour free workshop at the Boston Burlington Marriott as part of TFNN's Go Long America Tour. Tuesday, March 6th is their next stop, 6:30 to 9:30 p.m. at the Grand Hyatt Tampa Bay. So 2 free workshops coming up by Tom O'Brien and Steve Rhodes. So if you're in either of those areas, be sure to check that out. Again, my name is Ken Shreve. I write a newsletter at TFNN.com called Ultimate Growth Stocks. If you want to check out a 30-day trial to that newsletter, you can do it right on the homepage of TFNN.com. Click on the Newsletters tab on the top of the homepage, and then click on Investment Newsletters. I have my own show on TFNN. If you haven't heard it yet, it's every Tuesday and Thursday from 3 to 4 p.m. Eastern. I occasionally fill in for Tom when he is out on the road, but my show Breakout Investing, again, Tuesdays and Thursdays from 3 to 4 p.m. Eastern Time. Growth stocks are my bailiwick. They are the focus of my Ultimate Growth Stocks model portfolio, and they're the focus of my radio show every Tuesday and Thursday. Also wanted to mention before we get into the markets today that the new Tiger Dollar promotion at TFNN.com, very popular with all the Tigers out there. But if you purchase Tiger Dollars, you always get an instant return of 20 to 30% on your money that can be used on all of your purchases from TFNN.com. And if you do it before March 11th, you get free admission to Tom's all-day online master trader class. That's an $899 value, absolutely free. Now, that class is going to be going on during market hours, Thursday, March 29th, from 9:30 to 4 p.m. Eastern. All that information is available, as always, right on the homepage of TFNN.com. I'm going to be going over charts during the first hour of the show today. If you want to look at those charts right along with me, you can do it on Tiger TV, right on the homepage of TFNN.com. And Channel 1 is where you can look at those charts. All right, well, hey, let's look at a chart. Let's look at the S&P 500. Believe this is a final settle. Looks like the S&P ended the day down about 4.5 points, 0.3% to 1369. Still stubbornly holding above its 10-day moving average here. You can see in Tiger TV, I've got a chart of the S&P 500 with the 10-day, 20-day, and 50-day moving average plotted, and the S&P just continues to show strength, holding above its 10-day moving average. The next stop below the 10-day is going to be that 1357 area. Underneath that, the 50-day around 1316, 1317. Now, what's amazing is that the S&P 500, since December 19th, you're talking about a 14% gain over about a 2.5-month time period. So a pullback to the 50-day moving average here is only going to be in that 4%, maybe 4.5% from its current level. So not much of a correction at all is going to, could bring the S&P down to its 50-day moving average. It may or may not happen. To me, as I've been talking about on my show, there are a lot of extended stocks out there. So in terms of the stocks that I look at to buy for my model portfolio, I started putting money to work in late December, early November, early January, mid-January, late January, and right now there's just a lot of overextended stocks. I don't like to chase growth stocks. That's an easy way to lose money. So basically, I have 12 or 13 stocks in my model portfolio right now. I'm just kind of sitting, letting what I have work, watching how they act during market declines. And even the volume today, I mean, the market tried to sell off. We see the S&P 500 only down about 0.3%. Let's move over, take a look at the NASDAQ composite. That losses fairly contained in that index as well, down about 13 points, 0.4% to 2976. It's still holding above its 10-day moving average. 20-day line for the NASDAQ is at 2942 thereabouts. 50-day moving average all the way down at 2805. That's going to be a pullback of about 6% or so from the NASDAQ. So considering where the indexes have come from since the lows that were put in December 19th, a lot of people calling for a pullback here. You know, when you have so many people calling for a pullback, the market tends to do what is not expected, and it continues to move higher. So whether or not the S&P 500 and NASDAQ eventually come down to their 50-day moving average, it seems like a likely scenario to me at this point. You know, what is going to be the catalyst that's going to, fuel selling in these major averages? We've got the jobs report a week from today, next Friday. You know, do we see a disappointing jobs number that's going to fuel some selling? We've got a lot of retail reports coming up over the next couple of weeks. So far the retail numbers have looked pretty good. Solid same-store sales data yesterday, well above expectations. Retail earnings reports today that we'll go over in a little bit that were also pretty darn good. So really not seeing much in the way of sell signals in the NASDAQ and the S&P 500. Let's talk about the Russell 2000. I was talking about this with Tom and Steve yesterday. Clearly, it's the index that looks the most vulnerable at this point, since hitting a high of 833 back in early February. A lot of distribution in this area here. It underperformed again materially today, down about 1.6% to 802.42. So it looks very vulnerable here. Certainly, it closed at 802. Its 50-day moving average is at 789. So it's only about 13 points or so from the 50-day moving average, and we'll see if this really starts to technically break down. It will be interesting to see if that selling does filter into the other major averages. All right, we're going to take a call right now. Go to Joe in Boston. Wants to talk about probably what I consider to be the institutional quality fertilizer stock, CF Industries. How you doing today, Joe?
Good, Ken. I got this. I didn't know if this was on your short list of maybe candidates if this thing's setting up for you.
Well, yeah, as a buy, as a bullish setup.
Yeah.
Yeah, I mean, I was concerned about its price action yesterday. It brings up an interesting point, Joe. I mean, Joe is, I talk to Joe on my own show Tuesdays and Thursdays occasionally. We tend to look at similar stocks and good technical setups that are, poised to break out to new highs. One of the issues that I've been talking about in my newsletter, Joe, is that I'm a little wary right now of setups that are happening right now. In other words, the best, strongest base breakouts started happening weeks ago. So any setup that you see right now, arguably, could be considered sort of a laggard breakout that may not have enough juice to really succeed, especially, again, with the S&P 500 up 14%, the NASDAQ up 19% or so over the past 2.5 months. So CF Industries, again, I view it as a high-quality name. It makes nitrogen, phosphate fertilizers. Excellent earnings and sales growth. A little bit of deceleration in sales growth in the fourth quarter when they reported earnings, but technically it's still intact. The swing point is 192.40. When it tried to make that move, when was it? Earlier this week, right? On February 28th.
Yeah.
Volume never really came into the stock. If volume had exploded on that day, and if it had taken out that 192.40 level with conviction, I'd probably be feeling a little better about it right now. But I'm probably not gonna touch this one for now. Again, I've got my core list of holdings that I'm just going to sit with, and I'm a little wary on CF Industries, just like I'm a little wary on the broad market here too.
Right. Okay.
So, all right.
Okay.
All right, Joe.
Weekend.
Yeah, you too. Bye. Nice to talk to you. All right, Joe in Boston. CF Industries, yeah, good setup here. Toying with a breakout over 192.40. Excellent fundamentals. A lot of things to like about this company in terms of its balance sheet, but tried to make a move February 28th over that swing point. Juice never really came into the stock. It fell sharply on February 29th, and still just kind of muddling about here. So we'll see if it can get going in the future. I'm a little cautious on this one. All right, next up, we're going to go to Ben in Tallahassee. Ben, how you doing today?
Excellent, Ken. How are you doing?
Just fine. TGIF.
Absolutely. Yeah, I guess I'm not sure what your time frame is, but I think around December, January, you confirmed that you were then starting to see, I think you called it decent volume coming into the market. And I know Tom and Steve have been saying that the volume has been anemic. I was just curious, what your take is when as you define decent volume, how you kind of define that.
Well, all right. So volume hasn't been great. So I agree with Tom and Steve about that. But for example, if you take a look at the NASDAQ composite, whatever charting service that you use, I mean, first of all, it was on December 20th when the NASDAQ flashed a follow-through day. It happened very late in its rally attempt, but it was on December 20th when it rallied about 3% or so. Even on that follow-through day, volume was only about 1.75 billion shares. Now, the fact that it rose from the prior level qualified it as a follow-through day or confirmation of a new uptrend. Obviously, that follow-through day meant something, but I would say volume on December 20th was, anemic. Even though it was higher than the prior level, 1.75 billion is right around average for the NASDAQ. Now, from that time, Ben, when the NASDAQ started moving higher, you could see several instances, several 2 billion share days, 2.2, 2.1, at least instances where volume started to expand a little bit to the upside. Was it explosive volume? Absolutely not. In fact, it was only slightly above average. So the volume has been the best in the NASDAQ, even though it hasn't been great. So that's generally my take. Does that answer your question?
Yeah, I was just because you've done so well.
I'll tell you what. You want to hang on during the break, Ben, if you can. And I have to go to break, and we'll be right back, folks. Listening to the Tom O'Brien Show on TFNN. We'll be right back.